So here's the IDS. Do 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 do. Okay, so I am Tamika. This is my husband, Eric. For those of you that don't know, and we've been doing this business for 6 years, and we want to talk to you guys all about taxes. We had a couple of people reach out today just wondering what they're going to do come the end of the year. And so we're not experts. It is your job to know the legal stuff behind your own taxes. Okay. You don't get to just like be like, well, Tamika said, and then file your taxes, because that will not hold up in a court of law. I will delete this off of YouTube. Okay. But for reals, okay, we're just going to tell you what we know. Everything is different depending on the state that you live in, depending on your income brackets and levels. So it's your job to make sure you know your own rules. Everyone agree? Thumbs up or drop a 1 in the comments. You good? If you guys are watching the replay, that goes for you too. Put it in the comments. Okay. Perfect. So let's see. When I first started this business, I had the intent of making $50 a month. That was my goal. I had no idea that you could make a lot of good money with this. Okay. And I know a lot of people, they get scared of the taxes, which is why they choose not to make a lot of money, because they're like, if I make a lot of money, I have to pay a lot of taxes. I don't know about you, but his paychecks would be really, really nice if he didn't get all of the taxes taken out of him. Like, he's like, I just worked overtime. I got double time. I'm like, so how much did you take home? And it's like less than 50% that he actually gets to take home. And I'm like, what the heck? And then my checks come in and they're all big and beefy, and there's no taxes taken out, and there's no insurance taken out, and there's no nothing taken out. And I'm like, yeah, I'm making more than you, but am I really making more when it's all said and done? That's what we're here to learn, and that's what I'm here to teach you. Okay, so don't be afraid of the money. The more money you make, the more money you get to save, and you're never going to spend in taxes more than you make. Okay, and as long as you are very what's the word? Smart with your money, organized, responsible.
That's good.
Responsible with your money, then you're fine. Okay, so when I first started this business, like I said, I didn't start to make a lot of money. Well, come December, when we looked at how much my take home was, it was what, like a little bit less than my teacher full-time income, a little bit less than, for the whole entire year, what I would make as a teacher. And we were thinking, okay, like this is pretty good money. We don't want to screw this up. And so we went and took it to a tax guy. And then we decided to get a corporation. Okay. Now we did some research. We listened to what he had to say, and we're going to tell you what we know based on if you don't have a corporation. And then we'll just kind of tell you what a corporation is for us, and, just how it's a little bit different. Okay. So first off, you need to find out how much the taxes is in your state. Did you have a website for that?
You can just Google it. There's like taxfoundation.org. You can get on there, and it talks about all the states, because like Wyoming, we have 0 state income tax. But depending on what other state you live in, you can be anywhere from 0 or like 3 to, I think Hawaii was the highest at like 11%. They tax you on that on top of what the federal tax is.
So what is it in Wyoming?
0.
But what's the amount that we should set aside for our taxes?
Depends how much you make.
So what's that?
So the federal income tax, what they tax you is anywhere from 10% to, like, if you make 500,000 plus, is like 35%. So depending between like 0 to, like, if you're married, $0 to $20,000 is 10. And then above that, for each bracket, goes from 10, I think, to 20 to 24, and so on for each tier of income you make.
So what you need to do is you need to Google your number, and then I would add on an extra 5% to whatever you want to or plan on making. Okay. And so, like you said, like if it's between 0 and 20,000, 10%, right? So from every check, just take 15% and put into a bank account that you don't touch. Okay. If you want to make between $20,000 and $50,000 during the year, then instead of just saving 15%, take it up 5 more, and just 20% from every one of your checks, just put it in this bank account that you don't touch. Okay, if you want to make more than 50,000, then take that 25% of every check, put it in the bank account, you don't touch it. Okay, and that's it. Now, here's the beauty of that is you will never clean out that bank account. Okay, because number one, you're doing 5% over, right? And so you're already saving more. But the difference is when you pay your taxes, you're not going to be paying taxes on that $50,000 that you made, because you're going to have all of these write-offs that take it down. And then you're going to pay 15% or 10% on whatever that number is. And then you're going to have a couple hundred, a couple thousand still left in that bank account, which is your own little tax refund,
So an extra
right?
tax return.
Your extra piece. And so it's actually not anything to be scared about. So let's say, for example, let's just say you make $20,000. Okay, doing this business over a year, you make $20,000. Okay, 10% of that is $2,000. So let's say you made $20,000 and you have to pay $2,000 in taxes. Wouldn't you rather have an $18,000 profit than to be too scared to make the money to be able to pay the taxes? Like, wouldn't you rather say that you have $18,000 than I had to pay $2,000 in taxes, right? So like, taxes are nothing to be afraid of. So now, you guys, what can you use for tax write-offs? Okay, if you want to write this down, write it down. Okay. Let's start with, products that you use for yourself. No. Products that you give away or that you use as samples at vendor events, or like that I'm putting in my thank you cards to my customers, or not products that you're selling, because if you sell those products, then you should be claiming that cash on. Most of us don't talk about that. But so not products that you sell, but products that you're giving away, that can be in. Now, to a certain percentage. Okay, there is a certain percentage. You can't just be like, oh, look at all these products, I'm going to give it away, and then all a tax write-off. It's a certain percentage that you can write off. So you've got to keep track of what products are you giving, and do you have proof of that? Okay, so, are you making a little sample bag? You take a picture of it, you post it on your stories and saying like, so-and-so won a sample bag. And then boom, you have proof of it. You sent that out. You get to write off that $5 that the sample, bag cost or whatever it is. Okay. Mileage. Now, we used to keep track of gas money in the car, but you can't do that. It's either got to be mileage or car maintenance, right?
Or the percentage you use the car for work versus personal. But for us, it's way easier to just keep track of the exact miles we use for business.
So like so we went down to Utah last week, and I met with a distributor in Evanston, and I met with a distributor in Orem. And so, even though we were already planning on going down there, the drive down there is a business trip because we stopped at these places and like it needed to happen, and then the drive back, no, we didn't see anybody on the drive back. So the mileage from there to there. I try to tell Derek this should count, but he says no. Every time we go hunting, I'm always working in the car, and that's like my office. But Derek says, no, we can't do that. So, I mean, you got to use your own integrity radar. For me, I'm like, everything's a tax write-off. I can say everything that I do, like when I go to the bathroom, toilet paper, tax write-off. Derek says no. Okay. So, you just have to decide.
The main thing is if the IRS comes to you and says, was this a business trip? Was this for business? You have to have a legit, yes, it was, and a reasoning behind it. So.
Okay. So some other things. So we have mileage, clothing to some extent.
So wait, for mileage.
Oh, mileage.
The best way to do that is just keep a notebook in your car, or I guess if you want to have it on your phone. Sometimes I write it in the notes, but just keep track of your start and stop miles for any time that you do a trip in any of your vehicles, and then where you went and the date it was. And then that's enough proof of what you did for mileage. So.
And then two, make your post on your stories, make that post, just to say like, hey, I just met with my new distributor here, or I'm dropping off samples there, or I'm driving to a party here, or I'm traveling for this retreat there, post it on your social. And that also helps to have the proof along with your little notebook. Okay. Now, the other thing too is like, they're not going to come and audit you unless if it's like a crazy number, right? Like most of us don't have anything super crazy, but if you're like, I'm writing off 500,000 miles this year, they're going to be like, wait, what? And they're going to come and check you. So like all of your stuff that you guys are going to keep track of, like as long as you're being honest with it and it's not a crazy out of the park number, like you're not going to get audited for it. Okay.
And if you do, you keep all of the paperwork, and it's not a big deal.
Okay. So clothing, like if you're buying It Works clothing, for sure, that counts, you know. Would you say anything else?
It's supposed to be uniforms. So like It Works clothes, but you can't just go buy a brand new pair of jeans and be like, yeah, tax write off. But so It Works related clothing or uniforms.
Okay. Internet
and phone. Our guy says that we can write off all of it because it's required for everything. It's required for our business is to have it. So keep track of what you pay for your phone, what you pay for your internet every month.
Okay, so Christmas season, go get yourself an iPhone 11, tax write-off. Just kidding. Okay, office stuff. So
you're out of the loop. It's iPhone 12 now.
Oh shoot, God gravy. Okay, iPhone, just buy the iPhone 26. Okay. All right, so office stuff: printer, ink. I have thank you cards that I mail to my customers. I have welcome to the pack cards that I mail to my new distributors. My planner, any pins, markers, books, journals, envelope, paper, envelopes. I already said that. My Audible. So my Audible that runs each month. So that's what I would say for like office equipment stuff is all that kind of stuff. If you're going to do vendor events or parties, okay, if you buy food for your party for people to come, or like your vendor event stuff, like if you're buying any equipment, if you want to, you can write off the price that it costs to get your table. So like, decorations,
like advertising stuff, you can
advertising. Yep. And then retreats. So you guys who went to the retreat in August, you know, Google how much mileage it was from your house to the retreat, the food that you get along the way when you guys are traveling to events or business stuff, your plane travel, your hotel. The food is only 50% though, not 100%. So just save your receipts. And same thing there, like at the end of the year, all of your expenses for when you went out to eat for business related, you can take half of that. Sometimes I try and say date night should be a tax write-off because he's a distributor, but he says no. Okay. So he has a much more strict guideline with everything.
Tax guy said no too.
Okay. Postage. Okay. So if you're ever mailing out any gifts or stamps, anything like that, postage counts as a write-off. I think we got it all.
Yeah.
Do you guys have any other things that you would want to know if it would count? And like I said, we're not like the line.
Maybe we forgot something.
But maybe we forgot something if you guys had another idea.
Did you say gifts? I didn't hear you. Okay.
I have it written down. I may not have said it. I think gifts is only to a certain percent though. Like you can't like have all of the gifts and do 100% of it. Okay.
Does the internet have to be in your name?
No, you just have to be paying for it. Like you have to be able to provide proof that you're paying for it. So like you couldn't have internet and like Tamika couldn't be paying my internet bill and it'd be on hers and me take it off my taxes. So as long as it's coming out of one of your bank accounts or your husband's bank account or partners or whoever, your household's bank account, it would count.
Yeah, internet.
Okay, yeah.
Internet at your household as well.
Okay. Yeah. I use my son's, so that's just why I was wondering. Okay.
So if you're paying for it, yes. If he's paying for it, no.
No.
And if you're paying him for it, like so like Derek's mom pays the phone bill because we're all on it. And so we pay his mom every month, but out of my It Works account.
Okay.
And so like if you're paying your son, then just make sure, you know. Okay, the other thing that I think is really helpful is like when I started this business, I opened up a business account with Wells Fargo. And what I like about that, and I don't remember the extra things that a business had to have with it, but in the form part where it has all of your transactions, you can actually categorize. I'm losing my words. You can categorize what each bill goes towards. So like if it's a food expense, if it's a travel expense, if it's a this expense, and like we can make our own headings for it, or we can use the ones that are already in there. And so like, let's be honest, Derek does all the tax stuff. I just spend the money. And so like that way it makes it really easy for him to get in there and like move things where it needs to go and like categorize and see like, hey, here's the total for food. Here's the total for this. And so do you remember what the stipulations were between a business account with Wells Fargo and a personal?
You just had to have a corporation in order to have a business account. So, but there's several, I don't know, there's several different banks. You just have to ask which one you have and see if they have that option for categorizing it.
And I want to say it was like 50, like you had to have $50 instead of $25 to like open it or something.
Yeah, there's some
Something like that.
other little situations, but the one for us, for the business account at Wells Fargo, we had to have a corporation.
And so even if you just did a personal account for a bank account, I highly recommend it, because then that way, like everything in, everything out is just business. Unless if I lose my credit card and I have to use it because it's the only one I have. That has happened. but, but anyway, for the most part, it just all is business in, business out, you know? And that's another way too that I've been able to make sure that I always come out ahead is like, you know, I have two different savings accounts in there, or I have two different accounts. I have a checking account and then I have my savings account. And so like when I'm telling you guys save 20% or 25% of every check, you can literally just move that money over into that savings account that you don't touch. And then you can leave everything else in checking, or you could have like savings account number 1, savings account number 2, and be able to do it that way. Okay. So does anybody, did I say the wrong thing? Did I say yes, year? Did I say something wrong?
No, I was saying add that you only pay taxes if you make over $600 in a year.
Yeah. So if you
And
don't,
it works won't even send you a tax form if you make less than $600.
Yeah.
So
anybody who joins like towards the end of the year, they don't have to worry about anything for taxes, unless if they go Ruby and freaking sign 10 distributors and fast start them all, then yes, we'll have to worry about it. Okay. But even then, you know, they make $2,000 this year and they pay 20% of it, but maybe not even, because they'll have some tax write-offs. Okay. So what should you guys do? Or like tell your teams, you know, if you haven't already, I would create a report as far as how much money have you made so far this year. Check your fast start bonuses, check your commissions, see how much money you've made so far this year. And then I would just take, you know, 20% of that and make sure that you have that much in savings coming from your December check. And then make a list if you haven't already. Like, do you want to get the thing that we keep our receipts in? Get yourself a place to keep your receipts and just start tracking it, whether it's in a notebook or however you want to do it. Excel. Derek actually uses Excel. So this is what he does. I should pay him, but
this is what we keep all our receipts in all year long.
So up top here, every time I get an It Works order, one of these slips, it just goes in the top here. And most of the time it's my auto shipment, but if it was like stuff that I bought for a vendor show or stuff that I bought, like sometimes I'll write on my slip what it's being used for. But he literally just goes through this whole drawer. And then this one is all of the food, gas, and travel receipts. And these are all of the gifts and postage.
And I think office supplies.
And office supplies. Okay, Mandy's showing me her beautiful file. So I don't have the best system ever, but I have the best husband ever who does it. So you guys, it would be a whole lot easier if you kept track of it as you went.
Yeah, so the best way would be to like get an Excel spreadsheet and at least once a month get on there and make sure that you're got everything categorized and you're up to date on that, because it's way easier to do it as it goes than to try and figure it all out in December for the whole entire year.
So what we do is he tracks, I shouldn't take credit for anything, so I'm not, okay? He tracks it all And he puts them in an Excel sheet with the food, with the gifts, with the mileage, the bills, you know, all that kind of stuff. And then we just take it to our tax guy in January, February, and he does all the numbers for his work, all the numbers for mine, and then he plugs in what we can write off, like whatever percentages of whatever we can. He plugs it in to write it off, and then that's how we do our taxes. Now, you guys don't have a tax guy, you can literally just take it to the H&R Block, and they'll plug it in for you exactly where it goes. You just have to do the work of having it categorized and the proof of it. And so they'll do it for you if you decide to take it into a place like that. Okay.
Or if you're good with numbers and you're good with doing your taxes already, TurboTax or the online ones, they have all the options for self-employed as well. So,
but I think the scariest part is you're like, oh my gosh, what can I write off? Like, it's like, just keep track of these things. And if you don't keep track of it all, that's okay. If you keep track of a couple things, then you're going to have things to write off, which is going to bring your number down. And like I said, if you're not claiming anything crazy, then you're not going to have to really worry about it. And you're not making crazy money right now. Like, you're not Black Diamonds making 6-figure income, $1 million a year. So it's really nothing to be worried about. But the benefit of keeping track of this stuff is the more you keep track of, then the more you're going to be able to get back or not have to pay at all. Now, we've never had to pay anything in tax. No, we did 1 year.
1 year.
And what was it? We paid $1,000, $2,000?
Like $1,000.
Okay, so we did have a year where we made so much that we had to pay $1,000 in taxes, but I would much rather have made the extra X amount and paid $1,000 than to been like, oh, I don't want to make that much money, so I'm not going to. Like, we would have lost more money than what we would have made. But if you guys have a spouse who is working, so like with Derek, he takes out maximum taxes, and then you claim what, 0, 1?
Personally, I claim 0 and single so that it takes out the most it can.
So he takes out the most taxes that it possibly can, because we do like that tax return. We do like that extra money, right? And in March. And so if you do have a spouse that's making money, like, have them, you know, max out on whatever they can so that they can get as much taken out. And then, like I said, if you just keep this in a bank account, then if you do have to pay taxes, it's not going to you're still going to have money of that bank account. Okay. So, do you guys have any questions? And then we'll kind of talk about our corporation and how we got it started and what could be the perks if that's something that you want to do.
I had put one in, chat, but so I've always done my own taxes because I went to school for accounting after I graduated, but I'm getting that huge workman's comp check this month. Do they take taxes out of that before they send that to me? Or how does that work? Or will they send something for tax purposes?
I think Mandy would know.
So when I got my workman's comp settlement, it's a government check. They withheld all of my taxes from it.
All right. Thank you, Mandy.
Yes, thank you. All right. Any other questions about you guys' personal tax? Do you guys feel a lot more comfortable with it now? Not so scary. Okay. So we filed for a corporation in 2015. It would have been 2016. Because my first year in the business was 2015. And then we did it in January, February, right?
Yeah.
Okay. So we filed for a corporation in 2016, right before that tax season, because we just didn't want to, we felt like we were making enough that we didn't want to screw it up, right? And so to have somebody else do our taxes made them liable for it if there was any mistakes, like the government would have gone to our tax guy, not to us. So that was kind of nice, peace of mind. The guy told us that we could actually write off more having a corporation. And then did we find out if that was true or not?
He had a different philosophy than the one we started going to this last year.
Yeah.
We'll just say that.
So he had told us by getting a corporation, we could write off a lot more. Well, after we had him for 3 years, the last third year, we were like, this just doesn't feel right. It feels really shady. And so we switched to a different tax guy this year. And this guy was like, yeah, no. And so we feel a lot better about the guy that we go to now. So just be careful. Like if you go to somebody, you still need to know what you're doing, because ultimately they'll get in trouble, but also you'll get in trouble, like you're always going to have to make amends.
If you don't give them the right information, it still falls back on you.
Yeah. And you have to sign off that you're good with what the tax guy says. And so your name is still on that contract. Another reason why why I wanted to do a corporation is because now It Works doesn't pay me, it pays our corporation. And so our corporation's name is T&D Wraps. And then Derek is an employee under T&D Wraps. And so it just takes the liability off of me. And from what I read on the internet, if for some reason somebody came to sue me, it wouldn't take like my personal, like, materials, what's that word? My personal possessions. It would only be the company's possessions. And the only possessions that T&D Wraps has is It Works. Like it can't take my house, it can't take my car, it can't take any of my possessions. Now, along with that though, a judge can overturn it and say, no, not in this case. So that, that's a little bit murky waters there, but,
And we filed for an SCorporation. So what it mainly does is all of our It Works corporation money at the end of it, when all is said and done, it just gets pushed through to our personal tax returns so it'll just be considered income on our personal tax returns, and then we pay taxes on our corporation through our personal taxes that way.
so this is the first time that we've done it because we got a new tax guy. And if you don't want a corporation or to deal with any of this, you don't have to listen to anything that I'm saying. Okay, this is just for the ones who are interested a little bit. But with the tax guy that we got this year that we feel a whole lot better about, he said that we should be paying our taxes on the money that we're making quarterly. And so every 3 months, we've been writing a check to taxes and writing a check to me from the business. And so I'm getting paid from T&D Wraps every 3 months, a lump sum, and then we're paying taxes on that amount that I'm paying me. Now I still am having extra money left in T&D Wraps that I'm keeping in that savings account, and that I'm still able to pay my bills and do the stuff from checking. But it is a lot more entailed, and I don't do anything with that. So if you have questions, then you have to ask Derek about that.
And one of the other benefits of having a corporation is it bypasses the self-employment tax. So you don't have to pay that when you file your personal tax returns.
How much is that? Or what's the?
I'm not sure what that is.
Okay. I was going to say something. I just lost it. I can't remember. Do you guys have questions? Is anybody interested in doing a corporation? Mandy, a little bit.
Kelly, kind of.
Well, and with the corporation, so like, I might even put my Get Fit stuff under my corporation. So then that way it goes with it. Instead of like, as my program continues to grow, instead of it paying me, I would put Tamika Davis Online under my corporation. So then that way it falls under the same goodness, so like Derek's an employee in my corporation, Tamika Davis Online can be an employee in my corporation. And so just as an entrepreneur, a way to keep all your money in one spot through one place. And our corporation, some states, it just varies on states how much they cost. I was looking it up online before this, and some are like $50 to make your corporation, up to hundreds of dollars. And I think ours was $800.
That's what it cost us, $800 to get it put together.
So it is pricey. And so you just like, it really only makes sense if you're making enough money that, and you want to be making more money, that it just makes sense to get one if you want to have that protection a little bit more. Okay. Anything else you guys can think of? If you message me later questions and Derek's at work, I'm going to say, sorry, you have to wait till he gets home.
So main thing, if you're doing like as far as going through the year with your business and you want to know if it's tax write-off, is this legit for my business? Is this a business expense? If it is, write it down, keep track of it, and then use it at the end of the year. So,
and just save for it now, because number one, it's good. You know, like if you listen to the book Strangest Secret, you know, he always says, you know, save 10% of what you earn, save 10% of what you earn, you know, and so now you're going to put 10% of what you earn into a savings account, and you're going to put 15% of what you earn into your tax fund, or 20% or whatever it is into your tax fund. And then, you know, you can pay your bills and save the rest. But I'll go back to what I said at the very beginning, be responsible with your money, right? And that's why people get in trouble at the end of the year, is because now all of a sudden, yeah, they have taxes to pay because they made all the money, but they have nothing to show for it in a bank account. They just have all these toys and all these bills now. So be responsible with your money and take care of your financial obligations first, you know, to what's coming. And so that way you're setting yourself up for success. Okay. Are you unmuting, Mandy? No? Okay. All right, you guys, I will get this recording up and we can share it with our teams. See ya.